All right, welcome back. Welcome back, everyone. Back with the interview series. Our first guest is going to be Amir Adnani of UEC and gold mining, uranium royalty, and a number of companies. And Rick, it's actually really nice to have Amir joining us because, of course, he wasn't able to join us in Boca Raton. We had David Garofalo, we had Scott Melby, but it's really nice to have Amir here. So what are your thoughts?
It's important for the attendees to understand that this interview takes place in the context of the pre-recorded interviews that attendees will have access to when they drop down. These live interviews include the main stage presentation, the CEO interviews, and the workshops that were done by Amir's companies in Boca Raton. It's important that attendees listen to this interview in the context of those other interviews, which they will be able to listen to tonight. Amir, I'm delighted to welcome you virtually to the Natural Resources Investment Symposium. Sad that you were unable to attend the live event, but I understand that for reasons that will become apparent very quickly, that you had other fish to fry at that point in time.
Rick, it's a pleasure to see you. It's been too long, and we had a very productive participation and attendance at the Rules Symposium in Florida. Apparently, the turnout was very strong, and just a really efficient and beautiful venue. So congratulations to you and your team for putting on such a successful event.
Well, congratulations to you. Despite your young years, you've worked 20 years to become an overnight success. Let's move right into the discussion. Things are happening so fast in the uranium space and the American uranium space that it just, after years of torpor, all of a sudden it's like we're being force-fed success. Perhaps you could discuss the recent winds of political change in the United States, which threatens to see uranium go from a pariah substance to one that is, against all odds, becoming politically correct.
I think we got to start with the public opinion poll. Uranium for the longest time and nuclear energy were truly hated. And so it was the ultimate contrarian play to understand its very efficient energy attributes, nuclear power's ability to generate a lot of energy at a low cost and on a very consistent basis, hence base load. And those qualities were just never appreciated. This year is a milestone whereby we are seeing the highest percentage in terms of support in America in public opinion polls. And this type of all-time high support in public opinion polls is underpinning the bipartisan support we're seeing in Washington, where the nuclear power plants in the US have been given a historic level of credit toward the fact that they're emission-free electricity generation. So finally, the emission-free attribute of nuclear power is being recognized and valued in a world that wants to decarbonize and wants to give credit to those energy types that can help with decarbonization. European Union has just done the same thing by getting nuclear power into the European taxonomy. And so what we have is, for the first time in at least the 20 years that I've been building Uranium Energy Corp, we have customers, plants, and the utility companies that are in excellent financial shape. They are generating a lot of free cash flow, and they are not going to have any problem, in my opinion, paying higher uranium prices, because uranium ultimately makes up less than 5% of the cost to run an existing nuclear power plant. And with the existing fleet, which is short uranium, especially safe, reliable sources of uranium, I think the stage is set here where we see, again, a very, very healthy customer that can pay a lot more. And it's going to have to, because uranium prices are nowhere near incentive levels to see new mine development.
You've talked about a lot of things there, but let's talk about your 20-year focus to build a U.S.-based producer. Given that the Biden administration seems now to be in favor not merely of nuclear power, but also of what is, from the U.S. point of view, politically secure uranium. You've done a wonderful job consolidating the U.S. Producing space. Assuming that an incentive price were reached, and you could tell me what that incentive price needs to be, what sort of productive capacity do you have in the U.S.?
We've had this view all along that the U.S. should have a domestic industry, and that at some point, supplies in your own backyard would become of strategic relevance or just of importance to the customers, the U.S. utilities, which, by the way, is the largest fleet of nuclear reactors in the world, is right here in the U.S., powering 1 in every 5 homes in America with nuclear energy. What we never anticipated, and this is really the black swan event of this year, was that you would have this act of war, what Russia has done with its hostilities and war towards Ukraine, that would truly create this bifurcated market, whereby the US, who gets almost 50% of its uranium requirements being imported from Russia, is immediately almost controlled by Russia. Every pound of uranium that leaves Kazakhstan and Uzbekistan has to go to Russia for enrichment before it can come to the US. So there's this incredible dependency on Russia that now accelerates the importance of saying energy independence or uranium independence is critical. So the Biden administration gets it. I don't care who's in the White House. They're going to get the fact that you can't be energy independent and be dependent on Russia for 50% of your uranium requirements. We got lucky, Rick, because we spent 18 years with this theme, not thinking there would ever be this act of war and violence, accelerating the issue even more into our corner. And last year, as you know, we took a bold step and we stepped up and we acquired the company Uranium One from the Russian government before their invasion of Ukraine. And at a time where it felt, we just wanted to make a big bet, and we felt it was a transaction that could be very accretive to our shareholders, but it could also really go a long way with positioning UEC as the leading company in the US. And what the Russians had assembled in the US under Uranium One were fully permitted assets and a processing plant. So combined with UEC's production capabilities in Texas, we now have, to answer your question, almost 7 million pounds of annual production capability between our installed capacity and permitted projects in Texas and Wyoming. And that puts us in a position where we are the largest company in the US by permitted capacity to mine uranium and total uranium resources in the ground in measured, indicated, and inferred category approaching over 80 million pounds of uranium. And so this position that we have today, as you say, is an overnight success, well, a 20-year overnight success, but it was primarily done when the things that are now playing out that create this favorable backdrop were not in the picture. We believed in something that was quite contrarian in nature for a long time. We were able to make 10 cents on the dollar type of acquisitions. And now I think we're in a position of leadership, but at $47 uranium, it doesn't work. We need $60 uranium in the US to see restart. And so clearly the uranium prices need to move higher to get to that level. And I think globally, Rick, the incentive price levels to build new mines, for the listeners here, our projects are built. And so we don't have the CapEx requirement included in that incentive price, which would create a higher incentive price. For new builds, the industry is looking at $80 to $90 per pound. Today, we're at $47 per pound. And so I think we're in a good position to be a leader and lead production higher. But I believe uranium prices are poised to have a minimum 2x move from these levels. And even if that happens, the customer will have no problem paying for it because, again, it's such a small percentage of the customer's cost to run the nuclear power plants where uranium lands.
Oh, you've put that well. When something has to go up in price and can go up in price, it likely will go up in price. And I'd like to echo very briefly the numbers that you have put forward. Sources as diverse as the International Energy Agency, Kazatomprom, China General Nuclear, and Cameco all suggest that the all-in costs of uranium production, existing uranium production worldwide, including cost of capital, exceeds $60 a pound. And the incentive price for new production on a global basis is certainly minimally $75 to $80 a pound. Can you describe what price would be necessary for you to return and institute permitted production in your existing facilities? What sort of uranium price would you require?
$60 for the permitted projects that are ready to go.
60. It's important to note too, Amir, and I hope you talk to this, that the structure of the uranium business since Fukushima has been that the utilities have been able to rely on the spot market. In other words, they have been able to buy pounds that don't contractually guarantee free cash flow to the industry. It would seem now that for the utility industry to secure supply, particularly in the absence of Russian enrichment and re-enrichment capacity, that they'll need to go into the term market. Could you discuss the difference between the spot market and the term market and how that might impact the stability of cash flow in uranium energy?
Ultimately, the Fukushima incident caused too much available supplies, particularly out of Japan, to come into the market. And Rick, I give you a lot of credit because I believe you're probably the only person that was brave enough to really highlight the issue with Japanese inventories. I think the uranium industry being a very close-knit industry, maybe some of the Western companies didn't want to seem critical of their Japanese colleagues and highlighting the fact that, look, we're seeing a lot of material come into the market from Japan. But you've spoken about this, I've spoken about it as well. And that dynamic certainly has changed. And it's changed because Japan is also in the midst of its own energy crisis right now, and finally has the political capital, and their prime minister is now calling for the restart of reactors in that country. That takes a major overhang out of the equation. But for the audience here, the spot market has always made up maybe 20% of total volume that's transacted on an annual basis, and long-term contracting makes up another 80%. The last major contracting cycle took place in 2010, just the year before the Fukushima incident. So we've gone a long time without a major contracting cycle, and contracting cycles are what drives bull markets that we've seen in the last 20 years. The 06-07 bull market, where we saw the price go from $20 per pound to $140 a pound, and the 2010 bull market right before Fukushima happened, where prices went from $40 to $70 a pound in a span of 6 months, were driven by utilities committing to contracting. This time around, the dynamics are really more favorable in the sense that the spot market, in fact, has become much more liquid due to the introduction of the Sprott Physical Uranium Trust, a whole new entity and structure that we've never had before in the history of the physical uranium market. That added injection of capital that has brought about more price discovery in the spot market has made the spot market much more robust, and there's much more that we're seeing in terms of transactions there. But that's going to, again, drive further interest in contracting, because utilities are now competing with financial entities that can express an investment in physical uranium far more efficiently because of the Sprott Physical Trust, which, Rick, we don't need to talk about that. That's something that's the brainchild of yourself and Peter Groskopf, and you guys get full credit for creating something that's really transformed what was otherwise a sleepy spot uranium market. But I think this next uranium bull market will be significantly different and structurally different than previous bull markets that we've seen, because for the first time, there are no more available Russian military stockpile, the HEU agreement that was for 20 years in the market. There's a much stronger financial entity in the form of Sprott Physical Trust that will keep adding daily liquidity into the market when it can. That's a whole new dynamic and is shown to have huge impact. And we have a bifurcated market. The Western utilities want to reduce their exposure to Russia and sources of uranium that gets channeled through Russia. This means there's truly going to be a premium, I believe, for Western supplies, US supplies, Canadian supplies. And that's the platform that I think really excels in this next market. Finally, Rick, let's not forget, $70 a pound uranium in 2011 is where we saw incentive levels and where we saw contracting. That was the equilibrium price that brought buyers and sellers together. That price, adjusted for inflation in today's dollars, would be $95 per pound. And the '07 high of $140 a pound adjusted for today would be about $200 per pound. These are the numbers we're looking at today. It's important to look at the inflation adjusted numbers, not just quoting the '07 high and the 2010 high as though they're apple to apple comparison for today's realities of the world that we live in.
And financially, perhaps more importantly, to the extent that the administration and the U.S. nuclear power industry believed that supplying important U.S. generating capacity with U.S. source supply might lead, as an example, to 5 or 6 year term contracts for uranium energy, which would make it much easier for analysts like myself to be able to build cash flow models and assign full value to the producing assets that your company owns. Perhaps you could talk about the difference that might occur with regards to market cap. Were you able to secure longer term contracts that guaranteed free cash flow over a 5 or 6 year period?
Well, Rick, for the first time since the 1950s, the US government has come out and has issued a tender to purchase physical uranium from US sources for the creation and for the development of the National Uranium Reserve that the US government has created. This is a 10-year program, and it just kicked off about a few weeks ago. UEC has announced that we've tendered an offer to the US government to supply the US Uranium Reserve. We're very pleased to do that. Be great to have the US government as a long-term customer of UEC moving forward. But between the US government, US utilities, and Western utilities, I think we're going to have a very robust and very credit-worthy customer base that we can sell uranium to, whether it's in the spot market or under any long-term contract. Remember, UEC is 100% unhedged, though. And that is a differentiating factor between UEC and, let's say, a Cameco. We do not have floors and ceilings in place with respect to the pricing that we want to realize for the uranium that we have and we're going to sell. And remember, we have 5 million pounds of uranium that we already have in inventory that we've either taken possession of on US soil or have contracted to purchase at $38 per pound between now and 2025, like a low-cost stream. And that gives us the ability at $38 per pound to have a low-cost stream of uranium available that we can sell to either the US government or US utilities and really ramp up the production alongside this 5 million pound inventory position that we've built. So really to bring it back and to what you're speaking to, I think UEC will not only have proven projects that are permitted with past production, and so you've got significant technical de-risking that has happened, but to your point, the ability to sell uranium and have the visibility on growing cash flow to either the US government or credit-worthy investment-grade utility companies, this is setting up, I think, to be a very attractive energy business. And Rick, the final thought I'll kind of leave everyone here with is, in 2007, when uranium prices ran to $140 a pound, you will remember that investors were disappointed when the likes of Cameco reported that they were selling uranium at $50 a pound. Contracting can be a very dangerous thing in the early stages of a bull market. We've been in a decade-long bear market. Again, I think the fact that UEC is able to deliver uranium, able to be a supplier to the government and to utilities, but has not given away any of the upside, 100% unhedged, I think creates much more alignment with the expectation of an investor who sees a bull market developing here that could be quite historic in nature.
Perhaps the time that we have left, your lawyers will allow you to discuss the contest that you either are or were engaged in with regards to further consolidation of the sector.
We believe that there will be a bifurcated market here, that there will be tremendous premium placed on Western supplies, and that by that I really mean US and Canada. And with that regards, we felt compelled that this is still a window where you can make attractive, accretive acquisitions. And to your point, we've decided to get even bigger into Canada's Athabasca Basin. We have a transaction there that, again, based on our most recent disclosure, has been very well received by the shareholders of the company that we're looking at acquiring. And we expect that there will be hopefully a shareholder vote on that transaction Monday. And if successful, UEC will double its resources, total underlying resources in the ground. We will double it, and we will do it at a dilution cost to our existing shareholders of less than 15%, 1.5. And so again, another example of a very accretive acquisition for us, and the ability to really demonstrate that, look, we're building a company that is truly focused on North America, truly focused on having the largest endowment of resources we can have in politically safe jurisdictions that allow mining. Texas and Wyoming allow mining. I've got permits to mine uranium. Athabasca Basin, Saskatchewan, Canada, they allow mining. You can mine uranium. We want to make sure that visibility is there where you can get projects through to production. And I believe, Rick, after 20 years, we're almost at that point where we could be, especially if we complete this acquisition next week, the largest company in the world that's exclusively focused on North America. Remember, Cameco has 40% of its assets in Kazakhstan. We're exclusively focused in North America. We're playing the geopolitical thesis to the max. We want to be 100% unhedged, and I look forward to really continuing to do great deals for our shareholders and seeing how this thesis plays out.
Thank you, Amir.
Amir, we got to get going, but I hope you'll stay in the hall and answer the questions that are coming in the Q&A tab.
Sure, of course. I'll go to the Q&A tab.
UEC booth, and people can meet up with you there. I have to admit to you, Amir, it's been tough couple of decades, and when the price started to move, I was so happy for all of my friends in the uranium industry, yourself, Scott as well. But the person I was most happy for was your wife, I think, or the wives of these people engaged in these. So tell her from me, congratulations, and I'm glad things are going well for everyone in the industry.
Very thoughtfully, I appreciate it. Thanks, Albert. I'll head over to the booth.
Okay, so Amir's going to go back to the booth. We're going to go to break, conversation mode. Rick is going to be circulating around, and so I hope everyone will take advantage of that. When we were in Boca Raton, Rick, you were walking around like with a cloud of people around you everywhere you went. Here's your chance to get in on a conversation one-on-one or just with a couple of people. Ask him whatever questions you want. So let's go ahead, go to break, and we'll be back later with Nomi Prinz.